Hey, what's up, guys? So we're going to go over a live trade that I took on 113 of the HST model on NQ. Coming into the day, we had a pretty big move overnight. Now we've created this range that we're in. So I'm going to go mark out all of my buy and sell side levels and all of my fair value gaps real quick. There's definitely a couple of good spots where we could deliver from some fair value gaps down here. Good liquidity sitting down here too. So now that we have all of our levels marked, we have our fair value gaps marked for the bullish side. Let's go through and mark out buy side. We also have a bearish fair value gap here that we need to mark out as well. The best entry that we're going to get is some manipulation leg down, take out sell side, and then come back up and tap into that fair value gap that we just marked. So we'll speed through some of this to kind of get back up to where the trade starts. There's still nothing really going on. It's just been a slow, kind of choppy day. I kind of thought that the low would get ran first, but it didn't. So it looks like our move for the day is kind of what I was thinking when I was in this trade, was going to be run these relative equal highs, get the fair value gap sitting there. Clearly we're in a range. We had a big move down yesterday, so let's just play the range. There's no reason to fight it. So at this point, I start to recognize that we're forming a 3 drives pattern. So I'm really starting to like shorts after it sweeps those relative equal highs and taps into that fair value gap. And this is perfect trading range behavior, right? We have the back and forth. This is just generating liquidity on the way up. So we finally get the break right there that we win one. Grab the relative equal highs. So now it's sitting inside of the fair value gap, right? So now I'm starting to think that, hey, we just had this, what looks like a 3 drives pattern. So if we create an L1 right here, this is a A+ entry for sure for the HST model. This was exactly what I was looking for. It came up, swept those relative equal highs, tapped into the fair value gap, and created a great signal bar. I grabbed 2 cons, and I'm going to put my stop loss above the signal bar high, and put the fib up, and my TP1 will be a 1R, and my TP2 will probably be a 2R. TP1 is usually set in stone. I usually at 1R I'm going to take profits. And the second one, sometimes I'll wiggle it depending on what the price action says. But here we're in a trading range, so I'm just going to take it set on 1R and 2R and see how it plays out. This is the exact reaction that I wanted. A quick reaction from the fair value gap after sweeping liquidity comes, makes the L1, and have a beautiful entry after that. So here, I'm quite certain that the 1R is going to get hit, and I'm just going to keep it set and keep my emotions out of it like always, because you have to trust your model. That's the biggest thing. So there's really no managing it from here, right? I get my fib out, I set my 1R, put my stop loss, and then from here I'll set my next one at 2R after my one gets hit. And yeah, go from there. So it's pretty simple. There's nothing really hard to it. This model works extremely well when it's in a trading range. Um, when it's in a trend, you're kind of going from like uh, internal to external, obviously, but you just have to make sure that you have a good pull on liquidity. That's the only thing with that. But if you can recognize if you're in a trading range and you find these zones like this model is going to work perfect. Um, so yeah, so it's sitting here messing with my 1R target, which after a big bar like that, um, you're expecting some type of profit taking, of course. So obviously, trust your model. I'm just going to keep it set right there. Already up 35 points, which is nice. And we will continue to monitor this. This is an obvious spot that the Bulls would defend. It's the start of the third leg, and it's also a profit-taking zone because of that. And my 1R is kind of sitting right at the zone, so that's okay. I have no problem with that. I have full faith that this will hopefully hit. If not, I'm gonna trust my stop. See, there we go. So okay, so I got my 1R there. My stop will instantly go to break even, and we will yeah, just roll it from there. I've dropped my TP2 at 2R. Now I'm just going to go make sure that my stop loss is nice and tight up and close to it. I don't want to, accidentally get stopped out or anything stupid like that. So I want to make sure it's like, I don't know, probably half a point away just to kind of make up for the commissions. And that's it. So this is looking really strong, exactly what I wanted. Got a nice push down. Um, the IFVGs are even winning in this. Imagine that. They would have been close to getting out at break even, though. They wouldn't have yet. And that was always my problem, right? I couldn't ever get like an actual like 1R trade. It was very tough. I was very good at IFVGs, but I was a really good break-even trader, right? I continuously got to the internal point, like the point of nearest liquidity. I'd hit that, and then I get stopped out, right? I'd make like 50 bucks, 60 bucks, and it just like I was like, oh my gosh, man, it's tough to make a living on doing that. So then I kept on back testing and doing back testing, and I learned something from Al Brooks, this L1 and L2 and H1, H2 model thing. It's not a model, but it's an entry pattern. And I kind of just toyed with it and slowly just started seeing that, hey man, this entry is just a lot better than the IFVGs. I'm already taking profits a lot of times where the IFVG traders are getting in, which you can see it here too, right? I mean, I'm close to close to 1R and I'm getting, you know, 35 points right there, right? I'm at 30 points right where you would have got in. So, that's $600 with one contract. That's a lot, man. So I started putting that into consideration, I was like, geez, I had the same probability probably as the IFEGs. I have better risk. I know where my stop loss is going to be. So it just like started to make sense in my head like, hey, I should probably just start, trading these only. And then so that's just slowly what I started to do. This now made an H1 and uh, the Bulls who are probably trapped up on top, right? Because you got to think at one point that bar that swept liquidity and was in that fair value gap at one point was a big bull bar. So you can always expect when you have like the Bulls who are trapped like that to want to break even at some point, right? So right here, if you have Bulls that are trapped at the top, if they get a bull bar, they get a chance to buy above some type of bull bar, you want to take your fib level and you want to drop it off the top of there, and then you want to see where their entry was. So in this case, the H1, and then at the 50%, they would break even. And that's exactly probably what they just did here. My stop was very close to getting hit. But like I said, if you keep it, in the spot it's supposed to be, I guess, sometimes you get lucky. So now knowing that the Bulls just got their break even, there's really no chance for them to step back in. I know that I'm pretty in the clear to at least go test the low of this bar right here coming up, and we'll see where it goes from there. But the Bulls pretty much had their chance, right? They had 4 legs up to go up to grab liquidity higher, and we have a lot of liquidity sitting lower, so it makes sense to go lower. Plus, we're in a trading range, right? We're in a trading range. We know the top third is our sell zone. We know that the bottom third is our buy zone. And we know in the middle third we don't do anything. So right now we don't do anything. We take profits in the bottom when we take entries up top, and that's it. Just like I'm doing right here. And I'm going to do nothing else. This is now coming down and testing the start of the second leg. So let's see if the buyers will sit here and want to defend this or not. But I'm pretty sure that the shorts and the bears are in control of this now. And this should go tag my 2R now, no problem. And after this setup, I technically could look for the same thing going on the way up, right? If I had a fair value gap sitting down there, after this swept, now we have relative equal lows at the bottom. So after this swept those lows, if I had a fair value gap sitting there, I would take an entry to go back up and do the same thing on the way back up, right? Of course, I'm in a trading range, and those are my steps. I want 1, a liquidity sweep. I want 2, a delivery from a fair value gap. And 3, I want my H1 entry. So if I get all those, I'm getting in. But in this instance, looking on the 15-minute chart here on the left, we don't have anything but, until we get down to like 20, 550, and I'm cool on that at that point. So there's really nothing for me there. I'm not going to turtle soup it, so there's nothing. The only thing I would do again is exactly what the trade I just took. If we come back up, take out that high, sit in that fair value gap again, I would take the exact trade again, right? That's my A plus entry again. All we did is just generate more liquidity to take out on the buy side. So, hey, I'll keep on trying it until it fails. So my 2R got hit, and now I'm just I'm just gonna wait, right? I'm sitting with the Discord, and we're just gonna see what the chart offers us. I know I don't really have a good bullish setup. The only thing I like is that bearish setup I just talked about, sweeping now the new high a day within that 15-minute fair value gap, and forming another L1, and then taking it the same thing to 1R and to 2R. You can also see that the IFVG traders got stopped out of break even. That was the biggest thing when I was trading IFVGs. I kept on just getting stopped out at break even and getting like 8 points, and then watching the trade go. It happened time after time. So it was really tough to grow an account with making like $40, $50, whatever. It's really tough. So that's why I started to adapt this model. I'm now looking to see if the L2 traders had hit 1R, because that'll tell me if the bounce is actually credible. This is profit taking right here. And now I'm going to go check the H1 and see if they get their 1R right here, and kind of go from there and just continue to observe the market. I'm going to see if when we pop up into the bottom and open of bull bars, like just happened right here, if we respected it, that's telling me that there's bearish order flow right now. So this bar popped up, tapped up into the open of that little series of bull bars right there, and then pulled back. So that's still bearish order flow, and I'm still, technically just going to be flat right now. There's nothing for my model that I see. Like I said, the only thing I can see is the sweep up into that fair value gap, and that's about it. Otherwise, we would have to really dump down to like 2450, and at that, that's 300 points. I'm not going to touch any of that. That'll be well into the PM session, so I'm good. So we are in a trading range, and I'm not really expecting that bearish order block to hold. At this point, it's kind of looking pretty good that I'm going to get my setup. Uh, I could possibly get ran over because the pull on liquidity maybe might want to be higher. I don't know why it would. It's just in a trading range right now, so there's really a decent probability that this should work, especially with the 15-minute fair value gap sitting right there. If this was like a 1 minute or a 2 or 3 minute, it might be something different. The bounce wouldn't be as good, but this should be okay. So that's the setup I'm going to look for. So we just got the sweep right there, and now I'm just going to wait for my L1 to form, and that's it. The strategy is super simple. Wait for a sweep. You want a delivery from a fair value gap to make it, higher probability, and then you wait for a bar to break a previous bar's low, and that's what an L1 is. So now I'm just gonna pretty much trail the previous bar's low, like right there, put in my 2 contracts, and then hopefully this will trigger me in. I don't want to get triggered in right there necessarily, right? That's kind of a bigger stop than I would like. I want this to consolidate right here inside of the fair value gap. Give me a smaller stop, like it was to close right there. That bar to look like that. That's what I'm looking for technically. Those are the best ones. I don't want this to pull down real aggressive on me, because then my stop's really far away, and I don't want that. So I'm hoping that this will just sit here and consolidate, and I can get triggered into this. So the bar is going to close soon. So this is better, right? As long as I don't want it to keep going up, because it makes my stop, further away just as well. But if this will come down and tag me when it closes, it should be cool. I just pulled it out of the way because the bar hasn't closed yet. So technically my trade isn't valid, so I don't want to get ran into the trade on accident. Not a good idea. So we're just going to continue, and there it goes. It closes. So I'm going to make sure that I'm close to like 1 tick below the low. It has to be below the low. That's the biggest thing. It doesn't matter where. I mean, you want it to be closer, obviously, but it has to break that bar's low. So at this point, it's not looking very good for me. It went up, grabbed liquidity on top of that bar, and if this continues to shoot up, I'm just going to cancel this trade. There's no reason to be in it. This is a strong bull leg. It's still on its first leg for this time frame, at least. So right there, I'm going to measure out my 1R and 2R and to see where it is in relation to the range. So it's not too bad, right? The first target, my 1R, is in like the topish middle of the range. So that's cool. And then the 2Rs in like the start of the bottom third. So actually those are perfect. So I didn't get tagged in there, but technically this trade is still valid. I haven't had a bar that closed outside of my fair value gap, and when that we're still rocking and rolling. So if this closes, see, this is the big stop on this. I want this bar to consolidate right here and then tag me in, like right there. So the bar closes. If this tags me in, I should be rocking and rolling. It's looking right now like it's a failed breakout of a trading range. And we know that when we are in a trading range, 80% of breakouts fail in trading ranges. So it's always better to play the move that it's going to fail because the odds are in your favor. So we get tagged in and we're getting instant displacement, just what I want to see. So I'm setting my buy stops and oh wow, instantly tags me out at 1R. So I'm gonna go drop my stop at break even and we're gonna just let this ride out, right? There's nothing else really to it. I want to make sure that I'm close to that, but still enough to pay for my commissions. So like, I don't know, half a point away. That's what I like to do on NQ. Maybe like a point or two on MNQ, depending on how many contracts I have left. And now we're just gonna let it ride out. There's nothing else that I can do. I could, if I want, play this on liquidity and play it to the low if I wanted for my second take profit. But what I've noticed, if I have liquidity far away, then I'll just play my fib levels instead, my 1R, 2R, instead of chasing the liquidity, just for win rate reasons. And, obviously it's just that's far away, right? So for risk to reward, that's awesome. If you're a risk to reward trader, shoot, go for that. But that's not my style. I like to build my account, grow my accounts, and I don't have the drawdown capability in my accounts to be able to say I went like 2 points away from that low, the swing low right there at the bottom, and it came all the way back up to my stop loss or break even or whatever. That's a huge amount of drawdown, and I can't afford that. So now I'm just, waiting. This is a good bar, good entry bar. I got a good signal bar. It closed down its low, so I have pretty good confidence that this will go hit my 2R. 55 points, not bad. I'll take that all day. We're getting good follow through on the entry bar, so that's still a good sign. I would not move my stop. For me personally, I would just leave it there. You can, I mean, you're 38 points in profit. Some people might go to like the half R and leave their stop loss right there. So at least they're making a decent amount of money. And right there, I'm just making sure that I'm at my 2R because this is kind of slowing down a little bit. It's got a tail right there, but still expecting a move back to the middle of the range, at least like 50%, which is kind of where my take profit is. So this should tag me, and had a good day. Link is in the bio if you'd like to join the community. We'd love to have you. Thanks for watching, guys.